All right, let's see if we can get back on our feet here. We cannot get back on our feet here. I don't know what to do now. Oh boy. All right, maybe this will work. All right, everybody, I think I'm back. That was weird. All right, are we all back around here? That was weird, man. All right, everybody could see my screen. Sorry about that. I don't know what happened. I'm going to put these questions on the other side. Huh. That's never happened before. All right, so we're back here. You're going to see the calendar in a second. All right, sorry about that. Did not know what happened there. All right, so we're back to the schedule. We talked about the credentials. Use the credentials in the email you're going to get Friday, no matter what version of Infinity AT you use. We definitely had some gremlins there. John, I'll help you with that problem in a second. We have another supplemental rules webinar on Monday the 12th at 11 o'clock. If you're here today, you don't need to be at that. You could be if you want, but it's just going to be a repeat of some, a small repeat of some of the stuff that we're doing here. Feel free to come to that. Robert's trying to get me to go back to the start if you want. Now, it's a 5-day contest, and here's where things get kind of funny. Officially, you could start trading Tuesday night, which is 5 p.m. Chicago time, and trade all night and all day. Any trades that you make Tuesday night are considered part of the Wednesday trade date. So Tuesday, June 13th in the evening are considered for the trade date Wednesday the 14th. And that's true of futures trading. That's how it works. So it's just, this isn't a contest thing. This is like a real thing. So as an example, if you were to trade Tuesday night with a live account, and then you got your statement, your online statement Wednesday morning, the 14th, those trades you made that night won't show up because it's not booked yet to the trade date of the 14th. They'll show up on the statement you get the next day. Okay, so that's the weird part. And Wednesday then, the 14th, this is when most people will start trading. You could trade all day, all night, Wednesday, continuously, and then again on Tuesday and Thursday, and then Friday, it closes, markets close at the end of the day, and then nothing goes on Saturday. Sunday, the markets open up again at 5 p.m. Chicago time, right? Sunday night for the night session, and you could trade all night, all day Monday, and then finally Tuesday. So the 5 days really is Wednesday, Thursday, Friday, Saturday. Wednesday, Thursday, Friday, Monday, Tuesday, but you get a head start Tuesday night if you want, and you get a little head start Sunday night if you want. So I get a lot of confusion on that, so I thought I'd do this color-coded calendar, and then the next day, we'll audit everything to make sure everything worked out properly, and then we'll announce winners on the 21st. So it's a little weird, but most of these markets are open almost 24 hours, right? There's a time between 4 and 5 o'clock Chicago time when most things are closed. All the CME Globex things are closed. And then they kick back in again. So really, when you consider what's an overnight margin, well, it's holding contracts past 4 o'clock for 1 hour. 4 to 5 is overnight. It's kind of weird, but that's how it works. Scott will get into that in a second. All right. So if there's no questions on the calendar, let's talk about. Actually, here we go, Scott. Very next slide. How much? Scott asked, what is our starting balance? This is another great question because it's conceptually kind of hard to understand if you're brand new to futures trading. But we're starting with a zero balance account. In other words, everybody starts at zero. And let's say that trader A makes $200 the first day, then their balance is 200. Let's say they lose 150, and then their balance is minus 150. So we're starting out with a zero balance account. The maximum contract size, the maximum trade you could make is 3 contracts. So let's say, for instance, you were going to trade the E-mini. This is what got me in trouble last time when I put this dome in front of the. If you wanted to do a 3-lot in the E-mini S&P, you can. You could sell a 3-lot or you could buy a 3-lot. That's the maximum you could do. I just did a 1-lot. I just put a limit order in for a 1-lot, but I could have made it a 3. And I can't make it a 4. If you make it a 4, that's a rule violation. You get booted. Don't make it a 4. 3, 2, or 1. Okay, now the rule gets a little more complicated. You're right. You don't. Hang on, Richard. Let me get to that in a second. The rule gets a little more complicated in that you have a 3-lot position size. That's your max position size. So if, let's say, you're long 1 crude oil and short 1 Euro FX, you've already used 2 of your 3 positions allocated to you. So if you were to go ahead and then do another E-mini S&P for your 3rd position, then you'd have 3. If you tried to do 2 contracts with the E-mini S&P, even though you had 2 other positions in other markets, that would be a violation. 3 total lot size positions, regardless of the market. Okay. Now let me just check the questions here, because it's a hard concept sometimes to understand. Let's see. John asked, the lots are different for different assets, right? No, for every single asset you trade here, you'll be able to do up to 3. But keep in mind, the most overall net positions you have across all asset classes cannot exceed 3. Richard asked, can you put on 2 orders on different markets with 3 lots, or are you limited to only 3 lots outstanding? 3 lots outstanding. You can put as many orders in as you want, but when you get filled, you can't be filled with 4. Even if it's for a second, the system will catch it. Okay, margins, yeah, we're going to talk about margins in a second. Dev asked, can I use chart dome instead of regular dome? I believe anything in Sierra you could use. Bracket trades we're going to go over, Richard. Scott says, so it will fill 4, but you are forward versus backward and trying to buy 4. Okay, so if I understand the question here, let's just go ahead and buy 2 at the market, just for fun. If you wanted to reverse, you want to change your quantity to 4 because you wanted to be short 2 instead of long 2. See, we're long 2 plus 2. I'm going to sell 4 at the market. Now I'm short 2. That's completely acceptable. That's good. What's not good, let me see if I could show a little better example here. Let's just throw gold up, and then let's throw crude oil up. This is a better way to do it. Let's say I buy 1 crude oil. Okay, so now I have 2 E-mini S&Ps. I have 1 crude oil. They're opposite positions, right, in terms of short or long, but that's 3. I'm maxed out. I wouldn't go to gold now and add another one. Long gold. So this would be 4 positions, right? We'd have 1, 2, 3, 4. That would be bad. Okay, and you see it right there in the dome. The other way you could see it, oops, I didn't want to do that, is here. Well, this is the best place to see them, just to see them here. But you could see them on your quote board here on the left-hand side. You see 2, -2, 1, and 1. And I'll show you how to set the quote board up in a little while. That's the other way to see it. So be cognizant of that. Bracket trade, all right, so we're jumping the shark here a little bit, but let's go ahead and let me flatten this. Let's talk about bracket trades. Oops, I didn't flatten that. That's okay. Let's flatten. If you wanted to do a bracket trade, here's what it would look like. I'd set my quantity to 3. Quick click, I'm going to check just for demonstration purposes. I'll put a simple bracket in. I'll make it auto. I'll set my profit target at 8 ticks and my stop loss at 8. So I'm going to get a fill here. All right, so I just bought 3. I have a profit target of 3 up top and a stop order of 3 below. This simple arrangement, there's no way you can get in trouble in terms of the contest rules. Now, you can get stopped out. That would be trouble. People wouldn't like that. I wouldn't like that either. But it's a different kind of trouble. I'm not sure what Richard means by that wasn't a bracket trade, but it's called a simple bracket. It's automated, so when one side of the trade gets hit, the other side will cancel. So for instance, if we get stopped out here, down here at 24.35 and a half, then I'll be flat, right? I'll have sold 3 down here, and then this target will automatically cancel. It's called an OCO, order cancels order. But it's a simple bracket, very common, very popular. Richard says, I'm talking about putting orders in above or below the current price. Well, you could do that as much as you'd like. So let me show you. Let's get that gold bracket back up here. Where is it? That gold dome. So I'm going to set my quantity to 1. If I wanted to put limit orders in, I could click away. In a live account, this may be a strategy, it may not be a strategy, but you'd be able to do that. In the contest account, you could do it, but let's say you get filled on 1, 2, 3, 4 of these orders. Well, then you got a 5 lot, and you violated the three lot rule. Okay. I'm just going to flatten everything. When you flatten stuff, don't forget it makes your position flat and cancels all your working orders also. All right, we're going to call timeout on this stuff here. I promise you, we'll pull this back up, these domes, and we'll go over any kind of trade scenario you could think of until we absolutely positively get it. Let's continue here. John, I'll do a whole bunch of more demonstrations on this in a sec. All right, so we're going to assume a $5 all-in round turn commission. So the amount of trades you place matter when we calculate the highest net P&L to see who wins the challenge. So if you do 10 round turns, we're going to apply a negative $50 to your P&L, right? 10 times 5. If you do 1, then it's only $5. If you do 100, it'll be $500. So the idea is that we're going to mimic real world conditions. When you're trading with a live account, your transaction costs matter. And that's the direct relationship between two things. What's the bid-ask spread? How big is the bid-ask spread? In other words, how many ticks are between the bid-ask spread? Let me pull over an E-mini S&P to show you what I'm talking about here, even though last time I did that, I got in trouble. So the bid is the highest number in the blue. Those are limit orders to buy. The offer or ask is the lowest number in the pink. So right now, I would quote this market, I'd say 37.5 at 3/4. Half at 3/4. The bid is the half. The offer is 3/4. That's the smallest price increment for this market because it's so liquid and so much volume. And that spread is worth $12.50. So that's one part of your transaction costs. How much does it cost you to get in? If you want to buy the market right now, you're not going to get $37.25. The sellers are at $37.50. It's going to cost you $12.50 to get that price. And the opposite is true if you're going short. The second part of your transaction cost is your commissions and fees and all that stuff. The CME transaction fee, Infinity's commission, and the regulatory fee. Those things, I think, in almost all cases, are less than one tick, less than less than $12.50 in the E-mini as an example. So there, but it matters. So the number of times you do that matters. All right, so let's go back here and keep moving forward. Daily loss limit, $750. In other words, we're setting this up to kind of mimic a kind of a smaller account, but a realistic account. If your loss limit is set at a specified number, if you open a real account, and what we're trying to do in the challenge is say, listen, we're going to do the same thing. If you hit your daily loss limit in any given day, any of the 5 trading days, then you're going to be frozen out for trading the rest of that day. Try again tomorrow. And we do put this loss in behind the scenes. So it could be if you're liquidated at market, you could lose more than 750 or a little less than 750 because of slippage and all the nature of being blown out of a position. Now we're going to encourage everybody to manage their P&L in a way that they don't get to a point where they're auto liquidated. In other words, get out yourself if you're approaching that 750. Total contest loss means basically you could lose 750 3 times in a row, and then you're finally out. As soon as your net P&L is minus 2,500, your contest is over. Now, somebody made a point here. Wow, if I would be broke if I hit 750 in losses. The answer is that's your catastrophic end of day. You're out of the contest for the day limit. As you're trading and you're managing your own account, you're going to manage your risk and your loss according to your personal parameters. So when you're trading a live account, you might have it might be $100. It might be, whatever it is, that's going to be unique to you. But the 750 is the max, Robert. So that's when we call a halt to it. Okay. All right. So that's how the loss limits work. Flat at the end of the day, someone asked that question already. You can't carry positions past the close, and most markets close at 4 p.m. Chicago time. This is a day trading contest. The idea is to day trade. Maybe you only make 1 trade a day, which is the minimum, by the way. Maybe you make 1 trade a day, which is the minimum for the challenge, not for a live account. A live account, you might not make a trade all week. Who knows? You might make 100 a day. Who knows? But that's a whole different conversation. For the contest, the challenge, you need to be flat, no positions at 4 o'clock. If you're not, then your contest is over. And I'm going to get some calls. I know. I forgot to get out, or I had to pick someone up from school, or there's all sorts of reasons, which are all legitimate reasons. But like in real trading, if you were not to get out of an intended position, the consequences could be extreme, right? 1, you could be on margin call, which isn't good for anybody. 2, the dog ate my mouse, right? Or I have had the cat jumped on my keyboard as an excuse, by the way. 2, you have gap exposure overnight, even though the overnight is only an hour. You got earnings that come out sometimes. You got things that happen that could cause a market to wildly go against you when you don't have any protection. Because from 4 to 5, the market's closed and there's no working orders there. There's nothing to protect you. So, oh geez, what did I do? Hopefully I didn't totally just ruin my PowerPoint. So there's real reasons for this. This isn't just, hey, these guys are being sticklers on the challenge. So we want to experience a real experience, and that's the whole idea of the challenge. Eretz, the answer to your question is no. Steve asks, are trade costs included in daily loss limits? Yes. $5 per round turn. $5 per spin, we call it. Let's go over the calendar one more time. Tuesday night, the 13th at 5 p.m., the night session starts. You could start trading. Most people will start June 14th when they wake up or when the markets start opening up. All right, and I will post, this is on the website, and I'll also post it in the YouTube channel. All right, so where are we at here? All right, so what do you win, Mitchell asked? That's a good question. So we're teaming up with the CME group on this as our sponsor. And first place gets $500 commission credit. Second place gets $300 commission credit. Third place gets $200 commission credit. And the top 5 qualify for the annual 2017 championships. So if you're a funded account, that's a good thing. If you're going to become a funded account, you still would qualify. You got 9 months, I think, to open. And then if you're in the top 5, you qualify for the end of your championships. Dev asks, can we get the PowerPoint? It's going to be, again, it'll be on the video. Logan asks, what does it mean by end of day if I'm staying in Australia? It doesn't matter where you're at. And I'm going to go over times of each market in a second. It doesn't matter where you're located. At 5 o'clock Chicago or 4 o'clock Chicago time, CT, the markets close, most of them. At 5 p.m. New York time, the markets close. So you got to kind of extrapolate your time zone from there. So Eastern time's 5 o'clock, everything closes. No, wait, do I have it backward? Yeah, 5 o'clock Eastern, 4 o'clock Chicago. Christopher asks, is it possible to have a daily loss limit on real account? The answer to that is yes, and everyone does. Every real account has one. Not to be used as your stop, but it's there. Okay, so, okay, Wooder, I'm going to show you some results in a second. Let's go. And Steve, your question's perfect. Here are the markets that we're going to talk about. I'll go into them in detail one at a time. ESYM, NQ, et cetera, et cetera. No need to memorize this list because we're going to hop right into it. E-mini S&P 500 is the most, I don't know, maybe recognizable futures market. One of the most liquid, not the most liquid, but one of the most liquid and one of the most popular. It's based on the S&P 500 stock index, as the name suggests. And the contract size or unit is really the contract size is $50 times whatever the price is. So to understand the power of leverage here, and leverage is a double-edged sword. It could work for you as well as against you, so be careful. But you would multiply 24,037 or 24,037 times 50, right? So that's $120 something $1,000 worth of contract. That's how much market contract you control with one contract. So with a small day trading margin, you could imagine the amount of leverage you could have in this thing. And again, be careful with the day trade leverage. Thank you, Melvin, for doing the math for me. That's what that contract size means. Okay. $50 times the price. Trading hours. Okay, so this is traded on Globex, and for those of you who don't know what Globex is, this is the CME Group's electronic marketplace. In other words, it's a place where they match buyers and sellers electronically. There's no middleman, there's no broker, there's no person, there's nobody accepting or rejecting orders. They come in electronically and they're matched on a first come, first serve basis, which makes them transparent, which makes it fair, which enables us to participate better. Okay, you have a lot of people participating, a lot of institutions, a lot of algos. Everyone's heard of algo trading now. It's a big deal. A lot of big institutions and banks and hedge funds and guys like you guys are all participating in this on an even, transparent basis. That's what Globex is. So this marketplace, this opens up. And these are in Eastern time. I did cut and paste this from the CME Group, so they're in Eastern time. So Sunday at 6 p.m., Monday, Tuesday, Wednesday, Thursday, 6 p.m., we open up. We close Monday, Tuesday, Wednesday, Thursday, Friday at 5 p.m. So it's pretty much 6 to 5, or if you're thinking Chicago time, 5 to 4. Now there's a weird thing that goes on in the stock indices. There's a 15-minute halt. So at 4:15 New York time or at 3:15 Chicago time, there's a 15-minute halt, and then we resume again for a half an hour. Okay, and then after that half an hour period is done, it's over. Trades for everyone's got to be flat. We have an hour break, and we get started again. Minimum price fluctuation, there's a couple questions on this, is $12.50. It's a quarter point. 4 quarters to a point, so it's a $50 point. And that's where we get the $50 times the index equals the value. Okay, so John, let me just kind of show you in better detail. I'm going to flatten this whole thing out. I'm going to put a contract. I'm just going to do I don't know, we'll buy one at the market. Oops, I had my bracket in. That's okay. Ignore the bracket. You see my fill price at 24.37 and a half. 50 means a half. 25 is a quarter, 50 is a half, 75 is 3/4. And right now, the market is this dark blue. That's where buyers and sellers have agreed to a price. The last price that's transacted, that's agreed to. And every time it ticks down a tick, you're down $12.50. You can see that here in the open P&L column at the very bottom. Right now we're even, right? We're flat. The market's trading exactly where we got in. Every time it ticks down to 37.25, it shows minus 12.50. That's a tick. If it goes down 4 ticks, it's 4 times 12.50 equals $50. Okay? Does that make sense? I hope. All right, let's flatten this and keep moving. The symbol, of course, is ES for the E-mini S&P, and then the contract months are March, June, September, and December. And right now we're trading in June, which is M. ES is the ticker symbol. Look at the upper left corner here, the trading ladder. ES is the ticker symbol, M is the month, and 7 refers to 2017. Every 3 months these contracts expire and roll over. John, every tick is $12.50 for an E-mini S&P. Richard, yes, ES closes again at 4 o'clock Chicago time. Okay. Then ES opens again at 5 o'clock Chicago time. Again, there's that hour gap where the market's closed. All right, let's move on to the next contract. I want to talk about mini Dow, $5 Dow. Many of you heard it. It's $5 times the price of the Dow Jones Industrial Average. So you just pick whatever price it's trading at, multiply it by 5. That's your contract value. The hours are exactly the same as the E-mini S&P. 6 to 5 Eastern or 5 to 4 Central. And again, we have that 15-minute break. Minimum price fluctuation is $5, so it's a smaller tick size. Let's take a look at that. Hang on a second. Let me pull up the YM here. Bear with me. I might have to add it. There's something that you need to know. There's something that I could show this better if I have it up. Let's just do the YM, right? And then June contract, of course, is M in the year's 2017. So it's YMM. It's a lot thinner. There's a lot less contracts being bid and a lot less contracts being offered. So the volume and liquidity is less. Right now, the minimum size of the bid-ask spread for a small lot trader is 1 tick. So 202 bid, now it just jumped up to 2 ticks. So the thinner markets sometimes don't have a 1 tick bid offer. So a $5 mini Dow tick at the end of the day could cost you $10 to get in on the bid-ask plus your commission. So be careful of that. It is smaller. I think the mini NASDAQ will be a better representation because there's more volume. But be careful of the bid-ask spread because that could work against you. All right, let's close that. Let's move forward. YM is the symbol, and then the same months, March, June, Sep, Dec. How do you tell which? That's a good question. How do you tell which month we should be trading? Well, let's go ahead and do it an easy way. I'm going to cheat. Let's pull up the ES. I'm not going to cheat. This is a secret. This is a little trick. It's not a secret. It's a trick. All right, the very bottom of my quote board here, I have, this is a bad example. Well, yeah, I could use it anyway. ESM7 is June. ESU7 is October, which is the next contract month. If you go way over here, you'll see there's 547,000 being traded on the June contract and only 20,000 being traded in the Sep contract. Clearly, the liquid market here is in the June, and that's the front month, and that's what we should be trading. That's a little way to cheat. Oh, you could always call your customer service rep and ask them if you're not sure. Okay. Wooter, that's a great question. He says, my demo account doesn't have all the markets populated. You're right. The regular traditional demo account doesn't have all the markets populated on it. If you would like that, your customer service rep could set you up with more than just what you get when you download from the demo originally from the website. For the contest, though, when you log in with the credentials that I give you, all the markets we're going to cover right now will be on there. All right. Now we're having fun. Mini NASDAQ. Is anybody other than me having fun? Dev, we're going to get into that. Melvin's having fun. Thank you, Wooter. All right, let's keep going. Mini NASDAQ, $20 times the NASDAQ price is the contract value. Trading hours, same as the E-mini S&P and the mini Dow. Minimum price fluctuation is $5. NQ is the symbol. March, June, Sep, Dec are the months. That's contracts a little more liquid, and it's really, it's based on tech stocks, right? The NASDAQ 100 are tech stocks, and we know there's a lot of big name tech stocks in the NASDAQ 100 that actually could move stuff around and could move stuff around in a manner different than happens in the E-mini S&P or the mini Dow. Sometimes these are not 100% correlated. They're very strongly correlated, but they're not always 100% just because of the composition of the index. So keep that in mind also. Moving on, crude oil futures, very popular market. The contract unit here is 1,000 barrels, right? So when you buy one contract, you're buying 1,000 barrels. You sell one contract, you're selling 1,000 barrels. The trading hours are essentially the same as the stock indices, except there's no break. There's no 15-minute break. Okay. So keep that in mind. Minimum price fluctuations is 0.01 per barrel. That equals $10 per tick. It's a $10 tick. And the exchange, the symbol is CL. Now, CL is very popular. It moves. Let's pull it up. Let's pull it up. We're going to pull up the August contract. Oops, that was gold. My bad. We're not going to pull up the. We're going to pull up the July contract. My bad. All right, so here's the bids and offers, and they're somewhere in between the E-mini S&P and the mini Dow and mini Nasdaq. But you can see there's bids and offers are hundreds deep. And I'll just put a sample little thing in here. See if we can get the market to move. We're long one, we're plus one. And you'll see, and by the way, this market does move around a lot. It pops around a lot. So be careful because you do get more of a popcorn effect. I'll use the word popcorn effect. I just made that up. I'm going to trademark that. The popcorn effect is a little bit more evident. Now it's 12 o'clock, so it's kind of everyone's at lunch now, so it's kind of not doing a lot. But when it moves, it bounces around a lot. So you got to give yourself more patience. Some folks say it's not for beginners. Thank you, Wooter. But if with proper trade management, adequate account size, and some discipline, you could work it out. Right. The big thing now is between OPEC and the shale gas people. That's the big battle right now going on, and so as a result of that, we have lower prices than we had not too many years ago. But these things move based on this is a supply market, and you get a lot of news from the EIA and from other outlets on what's going on with production and storage facilities and stuff like that affect crude. So it's a kind of a good macro market, and we'll talk more about that in I think session 3. But you can see it's a $10 tick. All right, so let's move forward here. Henry Hub natural gas futures. This market, the contract unit's kind of weird. It's 10,000 million bushels British thermal units, and the trading hours are pretty much the same. 6 to 5 or 5 to 4 Chicago time. This market moves on a Thursday. There's an EIA report that comes out every Thursday morning, Energy Information Association. You could look that up. There's a lot of data on natural gas, and I'll show it more in subsequent sessions. But that's the day this market moves. Short of some kind of crazy event, that's the day this market moves, and trends start that day. David, as we talked about, this is a CME Group sponsored event, so no, there will not be any DAX trading occurring. Let's go to the next market, Australian dollars. All right, so there's a lot of currency pairs, and let me talk to you about currency pairs in general. There's a lot of different ways to trade a currency pair through cash forex or over-the-counter forex. Many of us are familiar with that, and through exchange-traded products like the CME Group. And there's a lot of benefits from exchange-traded products. In other words, you're not necessarily trading against a company. A lot of the OTC currency desks are dealing desks, and yeah, they try to match. Nowadays, they try to match up trades electronically, but they all aren't. At least that's been my experience. I don't know, but the CME Group, they're all matched electronically. It's all transparent. You see the entire depth of market. You don't see a depth of market in most FX cash platforms. Quite frankly, I'd rather be with, a publicly traded, globally recognized exchange where my trade is at than, somebody's private exchange. That's my opinion. But anyway, they're great markets. All the majors are pretty liquid. Australian dollars, an example. Contract size 100,000 Australian dollars. The contracts they're the foreign in the CME Group, with the one exception. They're the foreign in the majors, that is, with one exception. It's the foreign currency first and the U.S. dollar second. Okay. And the product codes, they start with the 6, and then it is 6A, so that's Australian, oops, I'm messing up my PowerPoint, Australian dollar, $10 tick. British pound is a little different. It's only 62,500 British pounds. The tick size as a result is $6.25 US dollars. 6B is the symbol. Canadian dollar, 100,000 Canadian dollars. We're back to normal with that. G6, I'm sorry, 6C, and it's a $5 tick. Euro FX, this is probably the most popular from a retail trading point of view, or day trading point of view, probably the most popular market, 125,000 euro contract. It's euro versus the US dollar. A $6.25 minimum increment. 6E is that ticker symbol. Now keep in mind some of the currency markets, especially the euro, there's several different times, and we'll talk more about this in the next sessions, but keep in mind, when Europe opens up, London markets open up several hours before New York markets open up. So that's the first time you're going to see some price fluctuation in the euro US, because there's two sides to that contract. There's two competing forces that affect the price of the euro. What's going on in Europe and interest rates over there and other stuff, and what's going on in the US with interest rates here and other stuff. We'll talk about the other stuff later. So the Euro FX is, then again, when the New York market's open, then it does others, then it moves again. Japanese yen is the one that's backward here. It's the US dollar versus the Japanese yen. And so that's why you see this contract size as being 12,500,000. You see the minimum price fluctuation at 0.000005. I know it sounds kind of crazy to look at it on a piece of paper, but the tick size as a result of all that math is $6.25. It's the only major that's quoted backwards. Now, the thing about the Japanese yen, though, which is interesting to me, and I noticed this a long time ago, was there's not a lot of markets that are moving in Chicago at 7 p.m., right after dinner time, because Europe's not open and we're done for the day, and the Asian rim now is starting to wake up and do stuff, right? So the yen does have activity. It's 7, 8, 9 o'clock p.m. Chicago time, which is one of the few that's actually moving at that point, just from a regular point of view. In other words, a regular market day. Obviously, if there's extenuating news happening, everything's going to move at any time. But on a regular day, the yen does do stuff at a time when nothing else is doing anything. Treasury bonds, one of my favorites. I was in the bond pit many years ago when I was a younger man, had more hair. Probably was a little smarter. No, I was definitely not smarter then. But it's a great market. It trades, it trends well. It's responsive to two things. Obviously, what's going on with the Federal Reserve Board here in the United States also serves as a flight to quality type of instrument globally. It's traded in 30 seconds. So that's another kind of weird thing. So when you see it quoted here, I have an example. You got let's say 134 in 1630 seconds. That's how it's quoted. Each tick is worth $31.25. So it's a bigger tick size than what we're used to seeing in the other markets. And then when you get to a whole point or handle, 31.25 times 32 is $1,000. It's $1,000 point. Okay, it's a big boy contract, but it's a great contract. It used to be the most liquid there is, and then it came in second place to the next one I'm going to show you. But trading hours virtually around the clock, again 5 to 4. Now this, for some reason, in the PowerPoint is Chicago time. I don't know why I have that mixed up. And it's ZB is the ticker symbol. 10-year notes. This is the most liquid, I think, from a retail trading point of view. Let me pull it up for you here on a trading ladder. ZN is let's add it. ZN. I gotta scroll down. Computer, don't fail me now. Do I not have ZN on there really? Oh yes, I do. I gotta scroll further. ZNM. Oh, I already had it on there. Let's put ZNU on here too. Let's open up ZNU. And look at the bids offers here. Thousands. Thousands on every single bid and thousands on every single offer. This is a tremendous market to trade. It's half the size of the bonds. It does trend like the bonds, but moves a little slower. So depending on your account size and your experience, this is a better market to get your feet wet on trading United States interest rates and trading yield curve products. Ultra bonds, 10-year notes, 5-year notes, 2-year notes, Fed funds. Those all represent different durations of the interest curve. This one, this 10-year note, the ZN, in my opinion, is the best one to work with. Terrifically liquid. Trading hours again 4 to 5, Chicago time. Ticker symbol ZN is in Nancy, and it is traded in not in half of 30 seconds or 60/4. So a tick size is $15.62.5 rounded up instead of $31.25. And the best thing to do is get on the demo and just play some trades and see how the math works and see how the markets move. Terrific market, 10-year notes. I think it's the most neglected. The saddest market there is. 5-year notes gets a little thinner, and it doesn't move as much. It moves less than the 10-year or the bonds, but a market you could trade also. It's even a smaller size tick. Gold futures is becoming very, very popular, and it's really, I did a gold webinar last week, and it's very correlated to, let me see if I have the chart up. Let's see if I have the chart up. I want to show you the relationship between gold futures and U.S. Treasury bonds. Let me squish this up a little bit. You could see this is just daily closes. Daily closes, bonds in red, gold futures in black, and they're very, very correlated. And it's interesting because the gold futures really react to, in my opinion, flight to quality or global uncertainty of not only financial stuff, but events, catastrophic events, which is horrible. We have too many of them, and but it moves nicely. But sometimes they're out of sync, and so that's why I have the little I don't know. The word pairs trading is big now. That's why I have the spread kind of charted below here to kind of show me if something's out of whack. I just have a simple moving average, 10-day moving average in the red, and it kind of could show you when the gold and bonds kind of deviate and can give you some trade ideas. And we'll talk more about those in future events. But gold's a great market. It's very, it's no one's getting delivered on gold. It's just a trading market, hedging market, speculating market. GC is the ticker symbol, and again, it's a $10 tick. How are we doing on time? Everybody okay? Corn, traditional, this is traditional commodity market. Someone asked earlier about commodity markets. What markets are, which markets can I trade? Corn's one of them. It's, the ZC, those are the contract months there for everybody to see, 1250 per contract, minimum price fluctuation. And note the times. Times are a little different, as we mentioned. Most of them close at 4 o'clock. These ones are a little different. The page you're seeing right now is quoted in Chicago time. Okay, 5,000 bushels per contract. The commodity markets are, I put them in a different category than the financial equity currency markets. Those are more financial markets. These are more commodity markets, and I put gold in the financial side, but they trend and they have reasons why they move, and there's a whole bunch of analysis that could be done on corn futures, and they're good markets to consider. The other ones we have are soybean futures, similar. We have wheat futures. I don't know why. Forget about the SRW. That just confuses everybody. Soft, soft wheat versus hard wheat versus red wheat. There's different kinds of wheat, but this is the main wheat. The ticker symbol is ZW, and that's it. And those are the markets. Those are the markets, and we're almost done with the PowerPoint. Any market questions, type them in. I'm gonna scroll back up and see the ones I missed, because I did miss a bunch. No silver, and I'll tell you why. Silver is a high margin. Most folks, most retail traders get hurt on silver, like badly. It's a big contract. It moves, and the margins are big. So for a day trade contest, it is not appropriate. I don't even think it's appropriate to day trade. I think silver is a market where you want to take positions and be well capitalized and know exactly when you're getting out on the stop side and on the profit target side. It's a specialty market. It makes me nervous. So to no silver. Just a little information about the Infinity AT platform. If you got a live account, we went over all the level 2 access, the bids, asks. I'm gonna pull up a trading ladder now. We'll talk about order entry. FCM owned and operated. One of the most important things here, our parent firm Transact owns and operates the trading platform and supplies the data feed from the CME group. They do a great job doing it. The platform itself is free. There's no monthly fee. There's no lifetime fee. There's no, it's $0. Sierra Chart's free. The charting is free also, as long as you do 10 round turns in a 30-day period. If you don't, you're charged $19.95. Maybe you're on vacation or whatever. Not a big deal. If you go to get Sierra alone, you're paying, I don't know what it is, $35, $40, whatever. As a standalone application, we subsidize that for you to $0 if you're trading, and to $19.95 if you're not. It includes market profile and all the extra level 5 stuff that Sierra offers. And we'll get into the charting tomorrow, and you'll see how powerful it is with respect to all the other stuff that's been, all the other commercially available stuff that's been out there that hasn't improved their system. These guys are on it. They're on it. They're on it. Anthony at Sierra is great. So we like it, and I'm going to go over all that stuff in nauseating detail tomorrow. Maybe not nauseating. I don't know why that's there. We're done with the PowerPoint. Everybody could clap. Pull some trading ladders out. Thank you, Richard. Richard's paying attention. He's clapping. Let me just scroll back up here just to see how much stuff I missed. Okay, let's see. Eddie says the biggest win here is seeing how to learn how to trade futures. That's exactly right. That's the purpose of this event, is to have fun and to learn. And for those folks who have accounts, they're going to compete for the prize money, and anybody could open an account and get the prize money also. But it's a good experience. What is the result we will have until now? Top 5 for 2017. How much? All right, let's take a look at. I think I understand your question, Wooter, and I think it's a good question. Let's go to Live Trading Challenge, and we're going to go to results. So now when this is LTC 331, the results in April, and this event is June, right? Every 2 months, and this is the leaderboard. We have 5 deep here, and we'll probably make it more than 5 deep for 331. This is going to be up here for 331, and it's going to update starting 8 o'clock on the 14th. Every 5 minutes it's going to update and show you the leaderboard. Okay, and this was the last one, and this is the let me move this out of the way here. I'm sorry, GoToMeeting and the trading platform opens up a lot of windows in my small real estate here, but So, Valerie won $6,000. When she, remember, it's a zero balance account. She took it up to that, or he. I'm not sure. Valerie, probably, haven't met Valerie. Audrey, Brian, Manzoor. We even got a profile on Manzoor. If you want to get your profile up here, we'll get you your profile. That's kind of fun. Good looking fella. And a guy from China. So here are the past results. You could kind of see where people are landing to get into the top 5. 3,000 to 5,000. We had rough conditions in January. The top number 5 guy, $272 got up there. Usually though we're in the thousands, as you could see. So that's kind of gives you an idea where you need to be from a competitive point of view. But again, we're going to expand this leaderboard for 331 and make it deeper so you could see more stuff. All right, now I got to scroll back up and find out where I left off. All right, anybody who's having trouble, who's new to the AT and is having trouble, let's start out with a couple of basics. Having trouble placing the sell order. I know a lot of you guys don't need the basics, but bear with me here for a second. Let's not use 10-year notes as our example. Let's use the E-mini S&P. All right, so you can scroll up and down, right, so you can kind of center the price. First thing you want to do is you want to select a quantity. So let's put a 1 in there. Second thing you want to do is, check quick click. Say check quick click really fast 10 times. Check quick click. That allows you to place an order with a single click of the mouse. And there's many different ways to do it. You could do a market order by simply clicking the blue market button. My bad, I had the bracket checked. Let's undo the bracket. Let's keep it simpler. Buy market, boom. Oops, didn't enter a quantity. I'm breaking my whole platform. 1, quick click, hit buy. That should let you go. That solves most problems. Most people click and say, hey, it's not going. And that's because quick click isn't checked. Now if I want to place a limit order to sell, I'm just going to move my mouse to the area I want to sell at. Let's say 24.41 even. I'm just going to hover my mouse over the pink or red column, and you can see you get a little flag telling you, hey, you're about to place a limit order. Click there and boom, you place the limit order. Limit orders are green. And then you even have another little 1 over here to say, hey, you're working a limit order at the CME group. If that was a live account, that would be at the CME group with a order ID number in line behind whoever was there before you. That contract's actually in line right now. If you wanted to modify it, you'd simply click on it and go down and bring it to the place you want it to bring it to, and click again. That's called you cancel the order and replace. It's called a cancel and replace. Now I'm in line behind 1,087 other orders to sell one. Now that number 1,087 is going to change, right? People are going to cancel orders. They're going to add to orders. They're going to move orders. So that number, when the market gets closer to it, will change. It's dynamic. So the longer you have your order up there, the closer you're going to get to being closer in line. And there's 2 ways of getting filled. One way is for the market to go through your price, right? So if the market goes up to 24.40.75, you're guaranteed to fill at 40.50. That's the definition of the limit order, at your price or better. The market can't go through you without filling you. Alternatively, the market could trade at 24.40 and a half and let's say complete 500 contracts and you're not at the front of the line yet. And if the market goes back down to where it's at now, you don't get filled. And I get a lot of calls that say, hey Jim, the market was trading at my price at 24.40 and a half, but I didn't get filled. Well, because there's orders ahead of you. There's orders ahead of you. The only remedy to that is the market order, and market orders, you lose a tick getting in because of the bid-ask spread. So this is part of the patience that's involved here. Let's see. Let me scroll down and see what other questions we have. I'm way, way, way above here in the questions. Bear with me. "15-minute break we talked about. We talked about commodities. No copper, but yes, soybeans, 30-year bonds. John says, my platform doesn't have all of the futures populated yet. Make sure you have the right contract month up, and they should all populate. It might take a couple seconds depending on your internet connection if this is your first time. What are bonds you could trade? Richard, this is very helpful. Thank you. Volume between the NQYS. Well, let's take a peek. Here's the ES. Let's add the other two. Let's add the YM. Bear with me here while I get my windows populated. YM is here. Let's add the NQ. NQ is here. All right, so let's look at the YM and NQ side by side. Pretty similar, right? Let me format this better so you guys could see it better. When I say guys, I mean that unisex, like guys and gals. I don't want to get an email saying you keep referring to guys. It's my disclaimer. It's my disclaimer for the day. All right, so it's similar, right? Mini NASDAQ, and you can see by the bids and offers. This is kind of a good judge. You could also go to the CME group and download their daily volume reports. They have a whole bunch of daily volume reports. I'll show you how to do that tomorrow. And you could use that to kind of see volume trends and which markets have the most volume. You could use the charts to figure out which markets have the best range, average daily range or average true range, whichever one you like. But that's kind of that's their compatible. They're pretty similar. And when you throw up to the ES, of course, the S is at least an order of magnitude bigger, if not more. 10, 15 times more volume on any given bid or offer. Those are your three different ones. Tick sizes are all different, $5, $5, $12.50, and contract value is different. All right. All right, Richard says, when it says 100 in the quantity column, is that contracts or orders? 100 in the quantity column. I'm not sure where's the quantity column? Here, this is the number of contracts you're going to trade. That's quantity box. Bid quantity shows the number of limit orders that are being bid at the exchange. The pink column shows the number of limit orders that are being offered at the exchange. So that is quantity. That's correct. Michelle asks, is there some place on your website that shows the cash markets of the different markets open? I'm not sure what you mean by the question. It does show when the different markets, futures markets opens. All the cash markets are different. Okay, no DAX. We talked about that. I got a couple questions about the TF, the Russell, the TF, the Russell 2000. It's coming up. It's moving over from the ICE exchange to the CME Globex exchange. So a lot of you guys are familiar with the Russell 2000. TF is the ticker symbol. It is moving over to the CME group any day now. I can't remember. Hey, Marcus, when is the TF moving over? TF. All right, so we think it's July 10th. The big brains behind me, and they are big brains, your customer service reps, tell me July 10th we're going to be able to trade the TF on the CME Group Globex, which means in the August contest we'll have that market available to be in the contest for the August contest, the August Live Trading Challenge. Harry asks, when is my gold webinar going to be uploaded on YouTube? It's not going to be. I'm going to do another one. I'm going to make it a little better. I wasn't happy with it. It wasn't good enough. Scott asks, is mini gold and mini oil available? Yes, they are. We're not doing it in the contest though. John, I don't understand your question. Patrick sent me a log in and I have nothing of the info you are sharing. I'm not sure what login he sent you, but I'll double check with Patrick and find out and get you the right stuff. Brent asks, is it free for all the exchanges if you don't use Sierra chart charting? If you don't use Sierra chart charting, you could use whatever charting you want. Obviously you're going to have a relationship with the chart vendor where you're going to pay them whatever their fee is. Our data feed is for, you're going to get charged, $6 per exchange at the CME group as an example, with a cap to $18 a month. And that's regardless of what charting you use. So the CME fee is $6. No, I'm sorry. The CME fee is $5 and then we add $1. So it's $6 per exchange with a cap at 18 for CME group markets. Herman wants to see the soybean chart again. Absolutely. It's not too far back. There you go. I'll leave that up. Globex is spelled right. I don't know why my spell check doesn't like it, but I like the red underline because this is the cornerstone of what we do is Globex. Robert asks, was that for a week of trading? I'm not sure what you're referring to. Type that question in again. William asks, can you use new instances? I'm not sure what you mean by new instances, but if you mean of the charts, yes. If you mean something else, give me a little bit more info. Julius, this is a great question. So Julius says, for the contest, we effectively have no margin requirements, only the position limit of 3. That's right, but position limits and margin requirements are kind of hand in sync, right? So if you had a let's say a $3,000 trading account, and you have a 3 contract max, then your day trading margin in effect is limited to $1,000 a contract. If you had the same $3,000 account and your limits were set at 1 contract, you'd have a $3,000 day trade margin. If it was set at 6 contracts, you'd have a $500 day trade margin. So the answer to the question is yes and no, but keep in mind that the number of contracts you're allowed to trade dictates how much day trade margin you have. And we're very flexible with day trade margin, don't get me wrong, with the live account, but also be careful. It's a double-edged sword. It could work, it could hurt you. And I've seen it happen more than once, by the way. So be careful with that. Patience is more important, in my opinion. We'll talk more about that in the next sessions. All right, let's keep going. Blue and pink vertical bands we talked about. Can you go over crude size tick and dollar instrument? Yep, let's go over crude again. I can't remember where I had that slide. It's probably up higher. Let me toggle through these slides here and we'll get, oh, there we go. So there's crude oil, and I'll bring up a DOM too. So let me lower these other DOMs. Lower in the DOM. Let me center this. So, all right, as you could see, crude oil, so in this fake trade that we made, my brilliant fake trade, by the way, past performance not indicative of future results. I bought one at 47.20, and now we're up around 47.38. $10 each tick. So now I'm up, right? So if I'm up 19 ticks, that's 10 times 19 or $190 P&L. You can see down here, of course, minus your commissions. With one lot, we're assuming a $5 one for the trading contest, so you'd subtract $5 from that. hopefully that's helpful on the crude oil side. And that's really, at the end of the day, that's the most important thing to know. It's a 1,000 barrel contract, but we're day trading, right? We're not taking delivery, or we're not delivering crude oil to Jim Mooney's house. We're literally going to either be flat at the end of the contract period, or we're going to roll it over to the next month. Crude oil is monthly. Okay. Oh, so now he's claiming he has a Prius. We're going to go into the electricity futures contracts in a second. Yeah, Michelle, keep in mind, though, the crude oil futures market also tremendously relies on, there's 2 EIA reports that come out, Energy Information Association, they're regular accounts. I don't remember the exact times they come out, that report different metrics in the crude oil market, at least the U.S. crude oil market. That's helpful to figuring out when to trade crude oil. Eddie says, I notice you don't have a stop in. Does the stop count as part of one contract? Yeah, so great question. So if I were going to put a stop in, and the mouse is kind of smart, right? You move it into the column and you say, oh, I want to, this is the buy in a limit order. Oh, this is the place to buy stop. Okay, I move my mouse to the pink. Oh, I'm going to sell one at the limit, or I'm going to sell one on a stop. Now, since I'm long one contract, right? My stop, my protective stop for this contract would be what? To sell a sell stop, right? So I'm going to go ahead and just place one here at 40. I just click the mouse once. It's red, right? Stop sign, stop, makes sense. And so now I have an order here to sell one on a stop at 47.30 if the market comes back down. So that's a simple way to put a stop in. Alternatively, if I want to put a target in, a profit target in, right, I'm going to pick a price, and based on my incredibly brilliant technical analysis, and I'm going to go ahead and just click the mouse once, and now I have a limit order to sell at 47.45. Now keep in mind that, you know, we're bracketed the market, but keep in mind stop orders work differently than limit orders. Stop orders are in effect like a market order. So as soon as this blue line touches 47.30, in other words, as soon as the market gets there, as soon as there's one transaction at that price, this order in essence turns into a market order and you're filled right away. Whereas a limit order up top, it has to trade either through your price or trade enough so that wherever you're at in line at 41.45 you get filled. So it's harder to get filled on a limit order than a stop order. Now in crude oil, that does have the popcorn effect, right? So it's less likely it's going to stick at 47.45 for too long of a period. It's either going to go through it or bounce off it. Whereas in the E-mini S&P or 10-year notes, it could trade quite a long period of time at a price before you get a fill. Herman says the crude oil inventory report normally Wednesday 10 a.m. Eastern time. Exactly right. That's what I was looking for. Thanks. Should you always use a stop? Absolutely. Best practices is to use a stop. Absolutely. You could always modify your stop if you feel like you need to put a stop in right away, and then you want to refine your positioning a little bit. You know, you could always just click and move it to a different price. Now, a bad trade practice is when you're about to get stopped out to keep moving it down because you think it's going to turn around, and then you keep moving it down, it's going to turn around, and then you keep moving it down, it's going to turn around, and it doesn't. And now instead of losing $160, you lost $320, and you feel bad, and I'll feel bad. So don't do that. Pablo asks, can I install Infinity AT in 2 computers, home and office? The answer is yes. Please do. The more you install it, the better. We like that. Okay, so Martin asks, why do the bid-ask columns disappear when you move your mouse onto them? Like that, I think you mean, and like that. And I don't know, but my feeling is, anyway, from my 2 cents, is it makes it easier to see where you're about to place your trade. Boom. All that clutter is out of the way, and I place the trade. Especially in a fast-moving market, it's very helpful. Anyway, all right, so we went through a lot of that stuff. Let's talk about the OCOs really quickly. I'm going to flatten this. This flatten button does two things. Cancels your working orders, your brackets, whatever you got going, and then sells one at the market for me, makes me flat. Boom. Kind of like a panic button. It's a panic button is what it is. Really. Don't say it. Don't tell anyone I said that, because we do not panic. We do not panic here at Infinity. All right, let me get rid of the crude oil. Let's go back here. Flatten button. All right, so someone asked about OCOs. There's 5 different ones, and then you could do them in combination, so there's more than 5, but let's just do the most common one. We're going to do what's called a simple bracket. I demonstrated this earlier. We'll demonstrate it again. I'm going to do a one lot. I'm going to have quick click checked. I'm going to go ahead and select auto next to bracket, simple bracket. I'm going to figure out my profit target. Let's make it 6. I'll figure out my stop loss. Let's make it 4. So I'm going to put an order in. I'm going to put a limit order in to buy one. And as soon as I'm filled, it automatically puts a profit target in there for me, 6 ticks up, and a stop order 4 ticks down, which is what I asked it to do. And when one of the legs of this trade gets filled, the other one will automatically cancel. Order cancels order. Trailing stops, Gene, we're going to talk about in a second. The answer is yes. When you flatten, Richard, it's going to flatten you out with a market order, so you definitely could lose a tick. Good question, though. Yeah, anytime you're using a market order, remember, if you're buying, you're going to get the best available offer. If you're selling, you're going to get the best available bid. And you always have the bid-ask spread to contend with. Rez asks, can you do OCO orders without using bracket orders? I'm not sure what you mean by that. The word bracket order it's just a word that says it looks like you have a bracket around your order. Order cancels order means if one of those legs gets hit, the other one will automatically cancel. All right, so if you wanted to do it not manually, let's take off this order. I unchecked auto. Let's just say, let's sell one at the market. And you want to add an OCO later, a simple bracket OCO later, you can. Just click the send bracket button, and it'll add it to the position after you established it. So you don't have to establish the bracket as a part of the fill. You could add it later if you'd like. I'm not sure if that's what you meant. Okay, so that's, you could, and as I just did, right, it's a good point. As I just did, I did a bracket, I sold one, right, I went short. That's one of the benefits of what we do here. And I was able to place a bracket the opposite, right? So now my stop is on top. I'm short one. I got a buy stop at 38 and a quarter, and I have a target market, profit target at 35 and 3/4. And I just did the opposite. That's one of the benefits of the CME Group future, of any futures markets, really. And again, if you want to modify one of the legs, just click and click, click and click. And you're changing the price is all you're doing. The order's still in effect. All right, let's go to trailing stop. Someone asked about trailing stop. See where it says bracket down here? There's a little drop-down box, and the very next thing is called trailing stop. Okay, I'm going to auto it. I'm going to put a contract on, and now I'm going to explain it. Now, there's 3 parameters here. The first one's easy. It's where do I put my trail? Where do I start my stop? Stop loss is how far from my fill is my stop order. Okay, I'm going to set it at 6. Trigger is how far does the trade go my way before the trailing stop kicks in. You can make it 1 tick if you want, or 2 or 3 or 4 or 5. I have it set at 6. We could change it to 4. So once I'm filled, market goes my way 4 ticks, the stop loss starts to move. The next thing, distance, is where does it start to move from? And this is where it gets a little tricky. This 8 number I have here says, once my trigger starts, count backward 8 ticks from where I got filled. That's where the stop is going to jump to, and it's going to start following tick for tick all the way up. Okay, so let's go ahead and do an example. We probably won't see much action because of the time of day, but so I'm filled at 37.25. My stop is 6 ticks down. 1, 2, 3, 4, 5, 6, right? 35.75. My trigger is 4. So as soon as the market prints 1, 2, 3, 4, a trade at 38.25, this whole shooting range starts. Everything starts. But it starts 8 ticks from here. It starts 8 ticks from 38.25. So I go 1, 2, 3, 4, 5, 6, 7, 8. It starts at 36.25. So this stop will immediately jump from 35.75 to 36.25, and then it will trail tick for tick as the market makes new highs. So the best thing to do with the trailing stop is to practice in sim mode or dem mode so you get these parameters straight in your head, because it gets complicated and confusing, especially in the heat of battle. So practice this one on the simulator or in demo account as much as you can. All right, any questions on that? I'm going to show you the next one, which is also a useful OCO. Let me flatten all this stuff out. It's called multi-target bracket. This is when you have more than one contract and you want to set different targets for your contract. So first of all, let's set our parameter. Oops, what did I do? Set our, I didn't mean to do that. What did I do? Cancel all. Properties, there's a little properties button down here. Let's center this a little bit. Little properties button down here, and you're going to go to set multiple exits. And let's pretend we're doing a 3-lot. You could make this whatever you want. You could make it a 4-lot, you could make it a 5-lot, but since the parameters of the contest are 3 lots, let's do a 3-lot. Lot size for my first target is going to be 1, and we'll have a profit target of 4. You could change this to whatever you want. Lot size for number 2, let's call it a 4. For number 3, we'll call it a 6. Break even on price, I'll check that. That just means when we touch the price, the stop will change. I'm going to hit OK. I have my parameters set up. The next thing I'm going to do is put my quantity in, which has got a match. So if I put a 2 here, it'll mess things up. So I want to make it a 3, right? We just set up 3 targets for 3 lots. Quick click checked, multi-target, and I'm going to put my stop at 6. The other thing I'm going to do is I'm going to check this break-even plus. I'm going to jump my stop a little bit. I'm getting fancy. And then break-even plus 2, leave it 0. Never put anything in break-even plus 2. But break-even plus 2, I'm going to put it as a 2. So let's go ahead and see what that looks like. All right, so there are my targets, right? So a couple of things are going to happen. One, if the market goes my way and I'm able to sell 1 at 37.25, you can see there's a 1 lot there, then my stop is going to change from a 3 to a 2. And the way I have this set up with the break-even, you don't have to have this break-even at all checked. You could just leave your stop there. But I have it so that it will jump to break-even plus 2. In other words, it will jump up to 2 ticks above where I entered. Now, in retrospect, that's a bad idea because I'm going to probably get stopped out right away. So let me show you a better example. Let me flatten this out. Let me show you a better example so it makes more sense to you guys. I'm going to change breakout, multi-target to 4. Profit target to 6 for number 2 and 8 for number 3. Hit OK. All right. Quantity 3. Stop loss 6. Break even 2. Let's get the buy market. Okay, so now I go 1, 2, 3, 4 ticks up for my first target, 6 ticks up for my second, 8 ticks up for my third. My stop is 6 ticks down. Now, when I get the first fill, this stop is going to change from a 3 to a 2, and then my break even plus 2 is going to jump up to 2 ticks above where I got filled. So the stop will go from 36 even up to 38 even, or 2 ticks above. And then if I have my way and the market continues to go up and I get filled at 24.39, then my stop gets changed from a 2 lot to a 1 lot, and my trail will have gone up 2 ticks to follow. And this will complete itself until we get the third target. Now, if break even wasn't checked, then this stop just stays where it's at the whole time. Everybody with me? Okay, so that sounds good. The last one I'm going to show you is a combination, multi-trailing. This is multi-target with trailing. So in essence, this is going to combine trailing and the multi-target. So it's a 3 lot again, buying 3, targets are up there, and then this is going to define how my stop is set and how the trail kicks in. Triggers 4 ticks. My distance is going to start 4 ticks from the trigger, and then it's going to follow tick by tick. It's another way of doing it, maybe a better way of doing a trailing stop with a multi-target bracket. So on your practice account, on your simulated account, on your demo account, if you have one now, practice these in sim and demo mode. If you're going to wait for Friday for the username and password from the demo, then you still got Friday, Monday, and Tuesday to practice. Any trades that you make Monday, Tuesday with your new login credentials are going to be whited out and not going to count toward your P&L for the contest, so don't worry about practicing Monday or Tuesday next week. All right. What did I miss? Did I miss any questions? Yeah, Gene, the best way, all right, good question. Gene says, is there an easy way to step up the dome to test out your trailing stops? I would test it out. The answer to that question is yes. I would test it out either in crude oil or in like the mini NASDAQ, NQ, because it's a small, it bounces around more and things trend more. So in some of the, mini Dow, mini NASDAQ, test out if you want a faster test, and then also of course test out during the open and the close. Those will help you see results on your tests. Does that make sense? Yeah, the center feature just centers, and I have my resolution because I'm an old dude, so I have my resolution thick on my monitors, but the center button is just centering, the last traded price in the middle of the trading ladder. That's all that does. That just, if something kind of runs away from you, you can't find the prices, you hit that center button and it shoots it in the middle. That's all that does. Richard asks, could you set profit target to 0 so the trailing stop is the only exit? Well, then you would just do a trailing stop. Then you would just do a trailing stop, Richard. There's no profit target there. No, Richard, you can't speed price action up on the simulator because the simulator is just that. It's trying to simulate the exact what you'd get with a real account. It's trying to mimic exactly the conditions you'd get with the real account. So you can't speed things up, but if you're trying to test some of these bracket trades, definitely test them on thinner markets, mini Dow, crude oil, markets that move with less volume are going to give you faster results. Replay is on the charts. Yes, we'll talk about that tomorrow. Back testing on the charts, we'll talk about that tomorrow. All right, so I think we covered some good ground today. Any last second questions? I want to thank everybody in the meantime for bearing with me. Sorry for the meltdown with the GoToMeeting software, but we recovered nicely with minimal damage. No damage. Herman, thank you. Robert, thank you. Richard, thank you. Everybody, thank you. Looking forward to seeing you guys tomorrow. If there's stuff I missed you want me to go over again, throw it in there. Have a great day. If you're trading today, be careful. Remember, trading futures, options on futures involves substantial risk of loss, not suitable for all investors. John wants me to check with Patrick regarding the login. I will do that, John David. Thank you. Take care, everybody.